In this presentation, we will review our second job cost system within QuickBooks Pro, QuickBooks Desktop. Here we are in our QuickBooks file. This is going to be two job cost tracking cost of goods sold. We currently have the open windows open. You can open the open windows by going to the view dropdown and the open windows list. Now we're going to go back to the Excel file to review our major points that we're looking at within the QuickBooks file. So if we go back to Excel, you'll recall that all the places where it's orange or red have now differed from the prior job cost system. The major difference being that we're having a timing difference. We're not going to be putting information into work in process, then finished goods, and then to cost of goods, but simply writing it off to cost of goods sold as we go. All the red journal entries then over here are the items that we are eliminating as we go through the work in process to the finished goods and instead go directly to the cost of goods sold. The orange items are going to be the items that have changed from the one setup to the other setup, mainly being that many of the items are going to be going to the cost of goods sold account instead of the work in process, and then instead of being transferred to the finished goods, and we're not going to be dealing with the factory overhead, but again, everything going to cost of goods sold. So you can see that's a more straightforward kind of setup, or at least it's one that takes less work because we're able to eliminate some of these items as we track that information through. Now, in order to do this, you got to note then that the job cost sheet then is going to be tracking the cost of goods sold. As long as we can track the cost of goods sold and be able to tie it out, we should be able to do periodic adjusting entries to go back to a more accrual or a completed contract or percentage of completion, whatever we need to do. To do that, we've got our job cost sheet to the right. The job cost sheet to the right, if we were adding up all the jobs for the time period that have been open during the time period, that adds up to 757. What's on the cost of goods sold or in cost of goods sold during the period is this 674. The difference is the beginning balance, so we can kind of reconcile those items and be able to tie out the job cost sheet to what's in the general ledger. So what do we need to do in QuickBooks in order to run this system that is different? You'll recall that when we go to QuickBooks, then we had to set up items so that we can then assign the items and use these jobs in order for us to apply things to both last time the work in process account and to record it in the invoice when we invoice at the end of the process. So this time what we're going to do is a similar process. If we take a look at those items, we're going to go to the lists drop down. We're going to go to the item list. We have the same three items: direct labor, materials, and overhead. However, if we go into one of these items, let's choose the labor this time. If we go into the item, then we have the double-sided item as we saw before. However, instead of going to the work in process, we have this going to cost of goods sold directly. So now it's not going to go to the asset account, it's going to the expense account. You'll note that this is basically what QuickBooks sees it as doing. So this actually worked kind of well for QuickBooks because QuickBooks basically expects this account to be at a cost of goods sold account, and so it actually works functionally nicely in that way as well. So we're going to put this directly to the cost of goods sold. The income side is going to be the same kind of idea. Then if we were to close this out and think about what's going to happen if I go to, let's open up our major reports. If we go to the reports drop down, we're going to go to the accounting and taxes and then the trial balance report. Let's run this report as of 01/01/20 to 12/31/20. So that's January through December 2020. So the major accounts we're going to be looking at, of course, is the cost of goods sold accounts, the major account that we are considering here. We don't have the work in process. We don't have any finished goods account. The next report we want to consider is if we go to the reports up top, we're going to go to the job time and mileage, and then we want to go to the job estimate versus actual summary. This is the account we're going to be using most of the time. And then we have the same kind of concept where we want to reconcile the actual costs to what is going to be on the trial balance in terms of the cost of goods sold in this case, rather than the work in process account. So that means anything that's going to be applied to the job then is going to be going straight to the cost of goods sold account. If we open up the cost of goods sold account, then we see all these check items. If you go into a check item, then you're going to see the check, and we're going to use the items to be going to it. In other words, if I close this back out, and I close this back out, and we go back to the home tab, and then open up, say, a check as we did last time, and take a look at a prior check. Let's take a look at a prior check let's go to another check here, not the overhead checks, and let's go to the direct labor. As we saw last time, we're in the items tab. The direct labor is driving the item. However, this item last time drove it to go to the work in process account. This time, this item is now directing, as we saw, just to go straight to the cost of goods sold account. We have the customers over here and the job setup. That'll help us to do the other side of things, which will be the invoicing side of the transaction. So that's going to be the major difference we'll have between these two systems. So then if I close this back out, everything then is going straight to the cost of goods sold. We don't have to worry with the problem, and it is kind of a difficult problem within QuickBooks to transfer between, as we did last time, between the work in process to the cost of goods sold. We'll see that's a little bit of a tricky transaction because, again, you would think you would do that with a journal entry, but you can't do that with a journal entry using this system. You need to use the items, and therefore you have to use some kind of forms to do that. So the transfer from something like work in process to finished goods to cost of goods sold is a tricky kind of situation with the use of those items. And actually, the item is actually set up to kind of drive towards the cost of goods sold account, so an expense type of account. So it works pretty well to do that just functionally within the QuickBooks setup. So it'll actually work fairly well to go straight to the cost of goods sold. However, if we go to the trial balance, then what we have is this cost of goods sold account here. If we go to the job cost sheet to match it up, this is 674. In the job cost sheet, we see this 757. So the two don't tie out. And you got to say, well, what's the reconciling item? We'd have to find the reconciling item. Now, there's no dates up here, so this is basically all of our jobs, right? So what we can do then is we could say, what were the jobs as of the end of 2019 to find the reconciling item? That's the period before the period that we are in. We'll discuss this more as we go through the problem. So we can go, this is going to be 010120. Let's go 010119 to 123119. And there's that 83,000. That's the difference, right? That's that 83,000. That's our reconciling item, just as we did over here. We have on the trial balance the 674. We have from the jobs, all the jobs open during this period that have been open during this period, 757. The difference is, of course, those beginning balances that rolled into from cost of good last period to the retained earnings or the equity or whatever you want to call it, this account. So that's what's rolled forward. That's the difference. Now, in QuickBooks, you also can reconcile this way. You can take a look at this and say, I want to run this report for 010120 to 123120. And then you see the jobs, and it's only going to show the portion of the job that was incurred during that time period. So in other words, job 14, this isn't the full job because it's not including the costs that were there in 2019. But this is a nice way to at least reconcile to the trial balance. If I go to the trial balance, that's 674, matches up to the 674. But if you want to basically tie this out to to be able to switch from something to do an adjusting entry in order to make it an accrual basis or complete a contract or percentage of completion, you need to know what that beginning number is. So you still kind of need to know that reconciling entry to do that reconciling journal entry, and you can find it if you properly set up the job cost reports in order to run that number. So that's the major difference between these two systems. Now, the other thing that we're going to do new in this problem is you'll recall last time that we said, if I go back to the trial balance, that we had the inventory parts. This is the inventory assets. We could track the inventory assets in terms of units. Say we're buying a fixed kind of unit of inventory, and then we're going to assign it to the job. We could then try to track that inventory in QuickBooks in terms of the inventory units. And we could use this report up top, reports. We can go down to the inventory and inventory valuation summary, and that will give us our valuation of the inventory. Let's make this as of 12/31/20. So we have 50 units on hand, $1,000, 50,000 of inventory. So this is a little more difficult to do within QuickBooks. It's more information to do within QuickBooks to track that inventory by unit and use average costing to track it. But if you have certain types of inventory you would like to do that for, then there's an option to do that. To do that, when we go back into the items, we'll go into the items here. We'll have to switch up the item once again, and we'll have to actually turn on inventory tracking, which we'll do within the problem. And then we'll record this item as a inventory type of item. And where is this? Direct materials, this one. Notice it's an inventory part, not a service item. And so it's going to be set up as a different type of inventory. If I go into there, we set it up as an inventory part as opposed to the service item. So that's another thing that will vary in this one. We'll basically track an inventory item as we go through this process.